Since 2017, I've led industry efforts to develop best practices for the digital asset industry. I've seen how ambiguous and non-existent regulation of digital assets create uncertainty in the market and inhibit innovation. The top priority of my chairmanship will be to work with my fellow commissioners in Congress to provide firm regulatory foundation for digital assets through a rational, coherent, and principled approach. So this is a pivotal moment for our economy. Entrepreneurs, businesses, and individuals here at home and across the globe are eager to invest in America now that President Trump is at the helm. Yet the current regulatory environment for our financial system inhibits investment and often punishes success. Unclear, overly politicized, complicated, and burdensome regulations are stifling capital formation, while American investors are flooded with disclosures that do the opposite of helping them understand the true risks of an investment. It is time to reset priorities and return common sense to the SEC. I'm eager to get to work for American markets and investors. Should I be confirmed, my goal will be to ensure that the United States is the best and most secure place in the world to do business.
Hey, what's going on, Bull Runners? Welcome back to the channel. Imagine this. You wake up, check your crypto portfolio, and your heart sinks. XRP down another 40%. Bitcoin crashing towards 72,000. The markets are trembling, and whispers of Trump's tariffs and something called macro liquidity are sending risk traders running for cover. Meanwhile, Elon Musk's latest power move has the SEC sweating bullets. What's really going on here? The crypto world feels like it's spinning out of control and stakes have never been higher. You're probably wondering, why does this keep happening? Is this chaos a signal to sell or a secret opportunity to buy? Stick with me because in today's video, we're going to be peeling back the curtain with these massive crypto headlines shaking up the game. You'll discover why XRP could tank even further, what's dragging Bitcoin down, and how Elon's wildcard could flip the script on regulations. This isn't just news, it's your roadmap for surviving the storm. Time's ticking, markets don't wait, and by the end of this video, you'll not only get a full scoop, but also a special bonus, a sneak peek for you into Altcoin Pro University, where everyday traders like you are crushing it, even in times like these. And if you're like most people where you don't have the opportunity to spend hours a day in the crypto news like we do here for you on this channel, make sure you subscribe right now. And if you're feeling bullish about this current bull run, let us know by commenting 777 down in the comments. Plus, today we will be jumping over to X to find out all the breaking news that's happening in the crypto market. And at the end of the video, we'll jump into the XRP charts and see where our next support and resistance level is for XRP. We'll also check on the short-term and long-term momentum waves. But first, let's head over to CoinMarketCap and check out the health of the overall crypto market. Today, we're down 4.31% with $2.73 trillion total market cap. There has been a significant amount of selling pressure going on, $92 billion total volume on the last 24 hours. Fear and greed index still sitting at 33. Yesterday was 33. Last week was a 27. Last month was all the way down at 21. Altcoin season index coming in at 18, still registering as Bitcoin season, same as yesterday. Last week was a 21. Bitcoin dominance going up another percentage, up 1.47% at 61.1, not looking good for altcoins at all. Bitcoin ETF tracker, last report came out yesterday for $89 million to the upside. Obviously today has an absolute horrible showing for crypto. We don't have the report for today until tomorrow, so make sure you subscribe. We'll come back and follow that up. But we were doing so well with building momentum and volume in the ETFs, only to have a massive sell-off today. There was a major CME gap in the charts for the futures of Bitcoin that was filled today. So did we bottom? Top 5 trending coins according to CoinMarketCap today. Number 1, Bitcoin. Number 2, Ethereum. Number 3, XRP. Number 4, Solana. And number 5, Trump. Top 5 coins by total market cap. Bitcoin coming in at 1.6 trillion, Ethereum at 227 billion, Tether at 144 billion, XRP at 126 billion, BNB at 87 billion, and Solana all the way down at 65 billion. And to recap this week, what happened in the important news for the markets total, not just crypto, but one of the main things that came out was the new home sales are down pretty significantly. It was forecasted at 682, came in at 676. So new home buyers are not feeling comfortable of purchasing a home right now. And also the CB consumer confidence was forecasted for 94.2. It came all the way down at 92.9. So consumers are feeling the pressure out there. On some positive news, the final GDP quarter over quarter came out, forecasted at 2.3, but came in at 2.4. So we are seeing growth in the GDP. Unemployment claims was lower than the forecast, which is also positive news. Pending home sales, which is different from new homes. Remember, new homes is brand new construction by new home builders, but all general home sales, pending home sales are up. So people are buying homes that are existing on the market because those are starting to actually drop in price. So if you like to keep up with the actual financial news, head over to Forex Factory and click on calendar. And you can see this is just the United States base. You can actually click on this little funnel here and filter out. I'm doing red folder news and orange folder news. Those are news that actually makes the markets move. And then you can select your currency you want to follow. If you're in a different country, you can follow those as well. Heading over to X to find out what is breaking right now. But just in, over $1.2 trillion was wiped out of the stock market yesterday. As you saw in the intro of the video, President Trump's SEC chair picks his top priority as establishing a firm regulatory foundation for digital assets. And in a big win for crypto, the FDIC now says banks can engage in crypto activities without prior approval. And a hot topic yesterday, obviously, was these cases that the SEC is getting rid of. The SEC has formally announced litigation dismissal against Kraken, Consensus, Cumberland says. And she says here, this is from Eleanor Tourette, no Ripple here, but I'm not entirely surprised because, again, it is slightly different than those cases in that, as Stuart Alderati mentioned in his post, the SEC now has to go to the Southern District and ask Judge Torres to lift the standard injunction. And once that's done, then they can vote on everything at once, including the withdrawing of the appeal. And in a wild and crazy piece of news, Elon Musk's XAI acquires X in an all-stock transaction, valuing both companies now as one single entity at $80 billion. Before we head over to the charts to find out the supports and resistance for XRP, this was a pretty telling piece that came out from Cointelegraph. XRP price may drop another 40% as Trump tariffs spook risk traders. Now, the other major thing that happened today was the fact that Bitcoin and Ethereum options did expire. We also did have Bitcoin drop down and fill the CME gap, which is always important in the futures contracts.
We just launched Altcoin Pro University, where our research team gives you real-time altcoin picks with explosive potential for this bull run, along with 100+ expert curated classes crafted by industry experts to discover these gems yourself, on top of our live weekly calls every single week for in-depth crypto market analysis and daily updates. And that's just a fraction of what we offer inside of Altcoin Pro University. Just go through the link in the description below, get in right now, watch the 26-minute video covering everything that Altcoin Pro University offers.
But on top of that, the XRP market is flashing warning signs as a bearish technical pattern emerges on the weekly chart. The XRP descending triangle pattern hints at a 40% drop. Since its late 2024 rally, the XRP price chart has been forming a potential triangle pattern on its weekly chart, characterized by a flat support level mixed with a downward sloping resistance line. As you can see here, we got the flat line across the bottom with the sloping angle from the top. A descending triangle pattern forming after a strong uptrend is seen as a bearish reversal indicator. As a rule, the setup resolves when the price breaks below the flat support and falls by as much as the triangle's maximum height. And as we take a look here, that support is going to be coming in right here. And the resistance of that level, the maximum height to the support line, gives a target of a price of $1.32 for XRP. Now, is that for sure going to happen? No. Can it happen? Yes. As of March 28th, XRP was testing the triangle support for a potential breakout move. And in this case, the price may fall to the downside target around $1.32. By April, down 40% from its current levels. XRP's descending triangle target echoes veteran trader Peter Brandt's prediction. He warned of a possible decline to as low as $1.07 due to the textbook head and shoulders pattern forming on the daily charts. So here you have your left shoulder, you got your peak here, which becomes the head, and then you've got your right shoulder. It would need to break the neckline here at $1.90, and then he says he has a target angled here at $1.07. Now, don't freak out, because conversely, a rebound from the triangle support level could lead to a price towards its upper trend line around $2.55. A clear breakout above this resistance level risk invalidating the bearish structures altogether, instead sending the price towards $3.35. And if you've been following along with my charting, which we'll be doing at the end, we'll be using our weekly spider lines chart. 250 and now 255 that we talked about yesterday is exactly where we need to break and turn into a new support level to continue our uptrend. Trump's tariffs could amplify the XRP sell-off. The broader market, meanwhile, has turned increasingly cautious in response of Trump's 25% auto import tariff. This will go live on April 3rd, and these tariffs are likely to result in higher prices for U.S. manufacturers and consumers. The February 2025 U.S. CPI report already showed a 0.2% month-over-month increase. The St. Louis Federal Reserve President Alberto Maslam estimated that these tariffs might contribute approximately 1.2 percentage points to inflation, with 0.5 percentage points stemming from direct effects of 0.7 percentage points from indirect effects. According to the CME FedWatch tool, the probability of the Federal Reserve cutting rates to a target range of 400 to 4.25 in June has now fallen to 55.7%, down from 67%. So the likelihood of this drop in interest rates, which we definitely desperately need as a country right now for everything in the country, it's looking like the Federal Reserve is trying to stick it to Trump even further and hold these interest rates at 4.5 or 450 basis points. A delayed rate cut would reduce the flow of capital into speculative markets, stalling momentum for XRP and other digital assets that thrive in low rate, risk on environment. So what's interesting is fundamentally all the great stuff you keep on hearing about partnerships and amazing things Ripple is doing and growing its fan base, its customer base, XRP army, spreading the word of XRP. None of that matters until liquidity can come back into the markets. And what the number one factor to bring liquidity back is companies being able to borrow money cheaply for other parts of their business. We do need the interest rates to drop. And XRP is not the only one susceptible to dropping. Bitcoin price drops to 72% possible due to macro liquidity conditions. After a positive start to the week, Bitcoin price reverted to negative returns after Bitcoin dropped 3.5% in the intraday, the low of $84,000 on March 28th. The price rejection occurred at the cusp of the descending trend line, which is the black line right here, as we can see, in the upper range of the ascending channel. So as we take a zoom in right here, price was making its move up nicely. Unfortunately, this trend line came into play. It rejected off there once, twice, 3, 4, 5 times on the daily chart, and now breaking down below the channel, seeing a potential return back into the $76,000 range. Macro liquidity refers to the capital available in the financial system that can easily flow into risk on assets like equities and crypto, but is influenced by factors like interest rates, Federal Reserve policies, and market conditions. According to Capital Flows, Bitcoin is exhibiting a greater convergence with traditional risk assets, but it remains at the periphery of the risk curve. This implies that for capital to flow back into Bitcoin, investors' mindset must shift from focusing on less risky assets, such as bonds, to riskier assets like Bitcoin and low-quality banks in the Russell Index, the researcher said. So broadly speaking, right now, the macro liquidity backdrop is neutral. Rates have come down marginally, but the carry trade continues to create risk for assets. But on the contrary, other analysts have pointed out the fact that the rise in the global money supply, the M2, could potentially trigger a Bitcoin rally. The global liquidity chart, which monitors M2 growth for major central banks, has historically formed a correlation with Bitcoin's price movement. So as you can see here in the chart, Bitcoin is the orange, the money supply is the yellow. It says global M2 money supply offset by 108 days. Bitcoin was making this nice rally to the upside. Now it shows that there's a potential pullback, getting back to that $76,000 range before the ultimate breakout to the upside, which is what the M2 money supply did. The key difference between the macro liquidity and the M2 money supply is that the M2 measures the total money supply. Macro liquidity highlights the ease at which capital can flow into risk assets. For context, even the M2 money supply rises, macro liquidity might remain the same if the money is allocated to low risk assets. As Capital Flows says here, the quantity of money in the system isn't expanding like it used to. But on a positive note, like we were talking about, Bitcoin fills the 85,000 CME gap. The CME Bitcoin futures gap indicates the difference between the closing price of Bitcoin futures on Friday and the opening price on Sunday evening. The gap gets filled most of the time, and traders approach these levels from point of resistance to point of support depending on the market structure. So as we know, over that last weekend, price rallied pretty significantly from these levels in the mid 80s all the way up into the high 80s, leaving this massive gap for that weekend. And now price has come back to fill the gap. BTC price did fill the gap before its daily close on March 28th, which can lead to a short-term bounce. The CME gap is also aligned with the retest of the lower range on the ongoing ascending channel pattern as mentioned earlier. And this is that ascending channel that we were talking about earlier. And then obviously we had that trend line that came down this way as well, which it bounced off of multiple days. This is the 4-hour chart, so you're getting a lot more noise in the chart here. So now it comes to another weekend. Last weekend we got the pump. This weekend we'll see, are we going to continue to dump? And after all this craziness going on with the SEC versus crypto, now Elon Musk's DOGE is going after the SEC. According to Reuters, on March 28th, DOGE team contacted the SEC and was told it would be given access to the commission's systems and data. The agency reportedly planned to establish a liaison team to work with the efficiency team, whose intentions were to not immediately clear. The SEC says our intent is to partner with DOGE representatives and cooperate with their requests following normal processes for ethics requirements, IT security, or systems training, and establishing their need to know before granting access to restricted systems and data. Jumping over to XRP and the charts, this is the weekly charts here. We can see we have 2 days and 3 hours left in this candle here. Now, yesterday, we were talking about this support level that comes in at $2.23 and needing to hold that. As we can see, yesterday's candle here was on its way to the downside. And today we have now broken through that level. Unfortunately, the next level of support is all the way down here at $1.91, which is where we bounced off on the daily on March 11th. Now, there are some indications that there are some support levels on the way. For example, if we take a look here at the 3-hour chart, we can see this blue line right here, which is the 1100 exponential moving average. We can see that it tapped exactly right off that level. But what's interesting, if we take a look back a couple of days further, we go back to the 4-hour chart, and that's where price touched exactly off of on the $1.90 level, which was on March 10th. So price came down, tested that $1.90 spider line for our support and resistance levels we've been tracking, but it did also bounce off of this level here, the 4-hour 1100 exponential. Now, the fact that we are working our way to the 3-hour and stopping and not continuing to drop, that is positive as of right now. We need to see a rebound off of this and making its way back up to the $2.50 level, which is what we've been talking about for so long. But now we also have to contend with this support line from that symmetrical triangle from the end of December, beginning of January. That has now turned into a resistance. You can see it hit it once, poked through, but twice, 3 times now. It has tried to break that and confirm by creating a support level. Unfortunately not. Broke back down. Now we're at the 3-hour 1100. If we lose this level, like I said, we could be returning to $1.90. However, there is also potential of support at the 4-hour 1100 exponential blue line, which is currently sitting at $2. The main thing that we were really hoping for that didn't happen, we're going to continue watching, is our long-term momentum wave here, which is the Wolfpack indicator, was just about to tap above the 0 line here, turning into a bullish momentum, which happened back here at the beginning of November, and we managed to really pump to the upside there for quite some time. However, we rejected off the 0 line, and it also gave us a hidden bearish divergence, exactly where we rejected off of the 250 line, and now we're turning back to the downside. Our short-term momentum wave, the shaft trend cycle, in the next 24 to 48 hours could zero out, bottom out, and then we could see a rally back to the upside from there. Unfortunately, long-term momentum still showing bearish, so we don't have much bullish pressure to the upside, even when we do reset. You can see last time we reset from 0 or low, this was all the way down at 8. The time prior to that was down in the 3, and then the time prior to that was 0. So you can see it's starting to create a trend line here to the upside, and these were actually bullish divergences, but unfortunately when it rallied up, it just could not break the resistance to the upside. So to summarize it all, what are we looking for? Well, one, we're looking for the next 24 to 48 hours, our shaft trend cycle to reset to 0. We're looking for a turn back to the upside and break above the zero line on our Wolfpack indicator. We're looking for a support at this 3-hour 1100 exponential moving hour average. So we should start to see a rally now within the next 3 to 6 hours. When you're watching this, it'll already have happened. If we lose this level, then we will be breaking down to the 4-hour 1100 exponential moving average, which, as we saw, was the $1.99 level, which is here. And if we lose that, then it's $1.90. And I don't even want to talk about if we lose that, because if we're losing the $1.90, as we talked about in the beginning of this video, there's a possibility of coming down to $1.32. And what's interesting on that is if you take a look at this resistance line from that symmetrical triangle back there, if it were to retest that level, it's going to take several days to get down to this level. So that really could test off of this at $1.32. It also coincides with where we stalled out on the upside for several days back in November 24th, 25th, 26th, before the rally to the upside. But conversely, positively speaking, if we break above 250, turn this now into a support level at 255, we are going to then run into resistance at 282, 290, and also $3 before making that ultimate run up to the potential new all-time high above 340. There is a resistance line up at $3.68. So we'll continue tracking this every single day. Make sure you subscribe today.
April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid.